SEC Chair Gary Gensler telling CoinDesk the ongoing insistence from crypto industries that the agency is leaving the sector without clear rules is a false narrative. Joining us now with more is CoinDesk Deputy Managing Editor for Global Policy and Regulation, Jesse Hamilton. Jesse, tell us, does Gensler think the crypto industry is playing a game here? What did he have to say?
So he took some questions from reporters last week, and Gary Gensler doesn't buy any of the typical argument that you hear from crypto lawyers and compliance folks that tokens can't possibly be registered as securities, and platforms would have an impossible task signing up as exchanges with the SEC. He basically openly scorns this line of argument, but as we know, he never really gets into detail about the minutia of digital assets that makes the space a different animal than what his agency typically regulates. And nobody can ever seem to corner the chairman on the structural questions because he sticks to his points that securities laws have been around for ages, obviously, and should be clear enough for handling the new kid on the block too.
It's not as if Gensler doesn't know anything about crypto. I mean, he taught the course at MIT, I believe, and so I guess the question is, I mean, is this on purpose? I mean, is it almost like he wants to do it this way, where rather than setting out clear guidelines directly from the SEC, he would rather do it regulation by enforcement, because it actually could be more stringent than if they were to spell out the guidelines.
Well, I mean, he runs the agenda at the SEC for sure, and we have to assume he's doing all of this very deliberately. And as you say, I mean, he taught it at MIT. He is an expert in this. And anyway, obviously, lately it feels difficult to actually keep up with the volume of the recent crypto cases out of the SEC. And to be fair, Gensler has been warning everybody that this was coming. Not too long ago, he decided to beef up the enforcement office that handles digital assets. They're putting 20 new slots there for lawyers. Now we see some consequential things coming up. You can tick off a few. Terra Luna case last week, gets into a significant argument about selling unregistered securities. Kraken went after staking services. Gemini Genesis, it was yield products, and the FTX case. A pretty important accusation that FTT was a security. And all these cases are sort of making a unified shadow policy, if you will, that defines what crypto can and can't look like if it's going to avoid SEC oversight. But spoiler alert, from Gensler's perspective, if it's not Bitcoin, it's almost certainly a security.
So we are seeing a recent surge in SEC cases being litigated in recent weeks. What's the significance of this? I guess, to Lawrence's point, does he prefer enforcement through litigation and enforcement?
Yeah, well, clearly that does seem to be the case. He's, as I mentioned, those cases, those are all very recent, and of course there were many cases before that that got into pretty serious crypto issues. So he's going about this very, very deliberately. If he wanted to pursue some other rulemaking, he could. And now, I mean, that's another point that there is some stuff going on in policy and recently developing. Just as recently as this past week.
We've heard complaints from people in the industry saying that they can go to Gensler, they can go to the SEC and say, "Hey, we want to comply," only to get pushback, or at least go about their business, and then all of a sudden find themselves receiving a letter, for a notice from the SEC. We had one guest in particular pretty much say that.
Caitlin Long yesterday, yeah.
Yeah, and before we had we had somebody else say the same thing. It seems to be a common theme that even working with the SEC is not helpful. Is that something you're hearing as well from other companies?
Yeah, I've certainly heard that about even advice from from former SEC lawyers to their crypto clients these days, not necessarily encouraging them to go into the SEC, which is, as somebody who's been covering financial regulation for a long time, it's a very surprising situation to hear the lawyers advising their clients not to talk to their potential regulator.
Is that something that is unique to Gensler, or I mean, have we? I don't believe we've ever seen that. As you said, it's
or
not
unique
something
to
you
the
usually
United
see.
States.
It's something I've never quite seen it like this before.